I believe short term, we are due for a correction. That's why I've given you those numbers there. But I do believe that the macros behind everything right now are going to move gold higher, but it has to, it doesn't have to, but typically corrects, which is a good sign of a bullish market, is to have a strong move up and then give back a portion of it. It's kind of like 3 steps forward, 1 step back, 2 steps forward, 1 step back. And that's what I believe we're going to see over the next, say, 2 to 3 months.
Short term, the price of gold may be starting to look a touch pricey. Dips are shallow and well supported, suggesting dip buyers are ready and willing to step in. Russia's invasion of Ukraine in 2022 and the wave of Russian asset freezes by Western countries that followed marked a turning point for the way central banks viewed gold, according to a report by Goldman Sachs Research. Central banks' purchases of gold have increased fivefold since the invasion began, and demand from governments is expected to remain high for some time to come, giving gold prices an ongoing boost, the report said. Renowned technical analyst Gary Wagner remains bullish on gold in the long term due to strong central bank buying, but expects a short-term correction. He views this pullback as a natural pause in an overall upward trend. While the gold market has retreated from the brink of another all-time high, the geopolitical backdrop remains highly combustible. The Israeli strikes on Iran have injected a clear risk premium across commodities. In his analysis, Wagner maintains his $3,600 gold target for 2025, but was surprised by Friday's record high. He notes that gold's pullback, despite ongoing fighting, reflects market confidence that the conflict won't escalate across the Middle East. Technically, Wagner warns that rising oil prices resulting from Middle East tensions could revive inflation and drive gold prices higher again. The subdued follow-through in oil may reflect a broader concern. Higher energy prices could eventually act as a drag on global growth. Some observers also note that a sustained price rise might incentivize U.S. shale producers to increase output, thereby limiting the long-term price upside. Despite the geopolitical flare-up, safe haven buying was short-lived. Gold opened at record levels but retreated alongside the Swiss franc, while the U.S. dollar managed modest gains as risk-off sentiment prompted investors to seek liquidity. Before we dive into Gary Wagner's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the markets. Let's get into it.
I mean, you don't want to count gold out for a couple of reasons, and central bank accumulation is probably the primary one. However, you're going to see peaks and valleys, even if the long-term trend, I believe, is still up. But I believe short-term, we are due for a correction. That's why I've given you those numbers there. But I do believe that the macros behind everything right now are going to move gold higher, but it has to, it doesn't have to, but typically corrects, which is a good sign of a bullish market, is to have a strong move up and then give back a portion of it. It's kind of like 3 steps forward, 1 step back, 2 steps forward, 1 step back. And that's what I believe we're going to see over the next, say, 2 to 3 months. So I am still holding to my upside target this year of 3,600. However, we hit an all-time record high on Friday. And so that came as a surprise to me. It wasn't, I could call it a black swan event. No one had any inkling that there would be the attack on Iran by Israel, and that, of course, moved the market sharply higher. So in that way, I underestimated the possibility. I do want to get that straight. But the interesting thing is, the fighting went on throughout the weekend. It's ravishing even as we speak, and yet gold is down, U.S. equities are up. And what that tells me is that the investors, market participants, professional traders possibly believe that this conflict will be contained between the two countries. And the fear on Friday was it spreading to a wider swath of the Middle East. And the fact that that doesn't seem as likely is why we are seeing gold trading lower today. That's my best read on it. And we'll talk about where it could go and support and resistance. But it does seem logical, even with the fighting, whether it's escalating but still elevated, that we are seeing gold down today. I absolutely see signs that we could be reversing. We could be entering some sort of a corrective period. It seems as though the different items that move gold higher, which was the concern about tariffs, inflation, well, inflation is cooled. And so the one thing about inflation that we'll have to watch is, because of the conflict being in the Middle East, what is going to happen to the price of oil. If that spikes up as it did over the weekend, that could bring on inflationary pressures. But I do believe that at this point, there's a good probability that we will see gold at least trade sideways or lower for the short term. And the same thing is, you've got to realize that even in the case you can make that with gold, when gold hits $3,500, even after everything that happened, it wasn't a sustainable move to have it move above it on a closing basis. So we've seen 3,500 plus in gold challenged twice. And at least this last time, it could not sustain that level and has moved definitively off that price point, down about $50 in trading today. So both of the precious metals, silver and gold, went to new levels that were unsustainable, at least right now.
According to Gary Wagner, there is virtually no chance of a rate cut at the June 18th Fed meeting. He expects Powell to highlight inflation risks linked to Middle East tensions and tariffs, particularly due to the potential price spike of oil. Wagner also notes that while gold could face a short-term correction, possibly down to the $3,300, the broader trend remains bullish. In short, a new inflation rise is likely to result in higher gold prices for an extended period and potentially a new price record depending on market interpretations. This is a significant reason why the price of gold has increased by over 90% in the last 5 years. Much of that rise occurred amid heightened inflation, particularly after the rate reached its highest point in decades in June 2022. Based on this historical relationship, investors and prospective investors could expect gold prices to rise in the days ahead. While discussing the white metal, Wagner mentions that silver briefly tested $37, likely due to profit-taking and resistance. He expects another attempt soon, with a sustained breakout potentially pushing it toward $40. Let's get back to the interview.
The probability of a interest rate cut on the 18th is nil, according to the FedWatch tool. But what traders are looking for is forward guidance, which is exactly what you're addressing, how Powell is going to reference everything. And I think that what he's going to do, because of the fact that the conflict in the Middle East just came up and it could affect oil, we know that oil is a very sensitive commodity in terms of the input of inflation. He will mention that, and he will probably something to the effect of, we want to watch this closely because this could change things. Also, the tariffs that Trump has placed and not finished negotiation, they're still elevated. And so no one really has a solid sense to whether or not that will lead to more inflationary pressures. We know last time it did not, but we don't know what's going to happen this time. And so I think with those parameters, it's unlikely we get an extremely hawkish stance. I would imagine he's going to address the fact that they want to monitor inflation closely, because the potential of oil spiking higher and the unknowns with the tariffs are something that the Fed's going to keep an eye on. And I think that they'll focus on that. It could be hawkish, but I would genuinely be surprised if he didn't talk about the concern he had for the potential price of oil, the conflicts that are ongoing, and the potential for inflation with tariffs. You know, the one thing that all of these technicals can show us is, if it falls, what are possible areas it could fall? If it rises, where will it possibly find resistance? Now we're looking at the potential for a fall, so where could it fall to? It doesn't really address a time parameter, how long that would take to work out. What I can say is that we know this is an event-driven scenario. We are, in terms of the basic Elliott wave count, which is something that I look at, back at the beginning of a cycle, this move from 31 and change up to today's high is what we're labeling as a wave one. After it hit this top at 35 plus, and then we had what's called an A, B, C correction. So an Elliott wave, a bull count, you get 5 waves up where waves 1, 3, and 5 go to the upside, the prevalent trend direction. You then get a correction. It works out in many different ways, but in this case, an ABC is what we've labeled it as. And the clock restarted back when we hit this low. So this is our wave 1. This red candle, if we get a confirming candle, and I believe that's likely, will signal a wave 2. A wave 2 can be a market move anywhere between, on the highest end, about 33.90 to 33.41. That's these red lines. And so how long it would take to kind of work out, I can't say. A deeper correction could take us to about 3,300. And I don't see it going as low as a 61.8%, but we could see gold go to 3,300. I think it's more likely that we'll see it go to 33.40. And that's basically what I'm looking at right now. I do believe that if and when silver breaks above 37, we should get a sizable move, maybe as high as $40. However, you can see that back on Monday of last week, it traded just to 37, but did not have the power to run through it. We then saw it correct on Tuesday, Wednesday, and then you've got these very small body candles representing Thursday, Friday, and today. We see it consolidating right above $36, but it seems as though silver didn't have the ability to break above it. Whether it's because you had profit taking come in, because realize we had a long spike up, a tremendous spike up over the last, say, 3 to 4 months. And so it's very appropriate that those that have been long are taking profits. Also, you could have the professional traders going in and basically selling into $37, saying that that is not something that's going to happen now. But typically when you get new all-time highs, that's not the case in silver. It's we've been here before, but it was years ago, but we haven't seen it. So typically when we get a particular price point challenge, it doesn't occur on the first attempt. It might try it once, sell off, try it a second time. And I usually say third time is the charm. So I'm not counting silver off or out right now, but I do believe it's going to have some real momentum to surge through 37. And we need to see it move through $37 per ounce on a closing basis and a couple of days of a sustained basis before I'm going to get bullish enough to say that now we'll see that breakout. I believe that will come, but it's not occurring right now. And especially if gold is under pressure, these things are softening. We're getting a little bit of a tandem move with silver. Although with the equities back up near all-time highs, there's the case to be made that there's high utilization, and there's a case to be made that the stocks are a little short. So don't count it out, but it was an unsustainable move that we saw last week. And I believe silver will attempt it in the future, whether it's the end of this week or next. I think don't write it off yet, but it's not going to occur overnight.
The gold forecast remains tilted to the upside. The brief pullback in price reflects tactical repositioning more than a change in the strategic outlook. Until geopolitics calm, gold's appeal as a safe haven will remain strong. With central banks buying at record levels and geopolitical risks still simmering, could the next gold rally be stronger than the last? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.